how you can plan out your trading journey, from first learning what a pip is, to actually placing your first trade, drafting a trading plan, and also let's say practicing on a demo account. So there's things in between that need to happen between you learning, let's say going through the ebook, basically picking up your first ebook, and then the last step would obviously be, let's say, taking your very first live trade. So there's a lot of things in between, and it does seem like a lot of guys were confused regarding what the next step is. Let's say after they're done with the ebook, what are they supposed to do, or after watching the videos, what's next. So hopefully last night's session cleared it up, and if you missed that, you can just go and watch that from the Telegram channel. So it's not a long session, probably like 20 minutes or so, if I'm not mistaken, and it just outlines most of what you need to do in terms of when you get started. So I've just been having some very, very hectic days, as I mentioned in the channel, because I'm a bit understaffed at the moment, right? So probably by next week, obviously, I'll have a few more hands to help me out with some of the stuff. But I'll get something which is like in a poster type format or PDF type format about the necessary steps that you need to take after you've joined the group, right, to help everyone know which step they're in, right, and at that particular step, what sessions they're supposed to be doing, and make sure you participate in the polls. I'll be sending out polls regularly, some in the form of quizzes, right? So I think it's been a while since I threw those in the Telegram channel. So I'll throw in, let's say, 10 questions there, right? And out of those 10 questions, you just answer as best you can, right? I'll be able to see the results. Obviously, I won't see who voted individually for whichever answer, but it just helped me to understand like where everyone is and what everyone actually needs in general. And also I'll be sending the polls where I'll be getting some like information about what we should focus on, let's say for next week's session, for example. Let's say stop losses or whatever the case may be. I'll send out a poll with 5 or 6 different questions or topics, and the one that gets the most amount of votes, that's what we focus on for the following week. Okay, so for now, I'll be going over a strategy that is in the ebook. Okay, all of this has been covered. If not, you can just download this from the Telegram channel as well and just go through it. I like to think it's pretty well done. I like to think that it is, but you never know. And it's just that it's been a while since I opened this up. So okay, so if you guys know, there are 2 basic strategies that we usually take a look at with when it comes to the NASDAQ, right? Or just basically trading indices. Okay, this is the first one. Okay, this one has the Heikinashi, right? The TVI, the CHL, and I think it's the T3 and the CCI. Right? So it uses oscillators mainly, as well as moving average and the Heikinashi, and also obviously I'd say candlesticks, okay, or rather Heikinashi candles, and also the moving average as well to actually enter once we get a signal. Right, so that is the one that I feel like a lot of guys are more familiar with, because the bonus strategy that I've covered in this ebook, a lot of guys are more familiar with that one. Okay, there's one where we discussed the Bollinger Band, right? It's just the Bollinger Band and the basic concept of counting candles. Okay, so if you've come across that video, okay, if you come across that video in the YouTube channel, then you probably know what I'm talking about. Okay, now if you guys don't know much about the Bollinger Band, right, no need to worry right now. I'll be doing a sort of like full-on in-depth session about the Bollinger Band, how it works, okay, and other oscillators that work like the Bollinger Band, right? For example, the TDI, okay, how you can use the TDI to, let's say, substitute the Bollinger Band. So if it's not working, right, if you don't like the way that it looks on your chart, or you don't feel like it's that effective, you can actually substitute the Bollinger Band with the TDI, and the TDI offers way more in terms of value, okay, only if you know how to use it properly, okay. Right, so with that being said, okay, I hope everyone is familiar with this particular strategy. Today we're not going to be going over this strategy, right, but it is important that you guys go over it whenever you do have the opportunity to do so. Let me know when you guys can see my chart. Let me know when you guys can see my chart, and let's get started with our Bollinger Band strategy. Okay, now for those who aren't familiar with indices, right, I've recently done a session which was more of an introduction into an index. We're mainly focusing on the NASDAQ though, right? So mainly focusing on the NASDAQ 100, but there's also German DAX, right? The CAC 40, the SA top 40. Okay, there's the Dow Jones, and there's the Aussie 200. Now these are all indices. Okay, now these are all indices, and these indices basically are sort of like a composite. Okay, hope you guys can see my screen now. And now these indices are composite of different stocks. Okay, so blue chip stocks, let's say for the SA top 40, it would be made up of, let's say, MTN, right? Your what's this, Pepco, you know, so all the large blue chip stocks traded on the JSE would actually make up the top 40. Okay, just as with the NASDAQ, it's just that the NASDAQ 100 is top 100 non-financial companies, and they form the NASDAQ stock market. Okay, and then the German DAX top 30 in Germany, right, and the UK 100, which is the FTSE, right, the Frankfurt Stock Exchange, and that is the top 100 stocks there. Okay, from the Frankfurt Stock Exchange, the FTSE 100. I think the symbol for that is FSTE or FTSE. Sorry, guys, my mind is just fried today. Okay, so the very first element of the strategy, right? So when you're looking at any of these indices, generally when you're looking at an index, you're going to have some very nice upward movement. Okay. So just give me a moment, guys. So when you're looking at an index, especially if you do so on some of the larger time frames, okay, so if you're doing so on the larger time frame, you will see that the market itself, okay, is typically in an uptrend. Okay, so let's just find the NASDAQ 100 here, even if it's just the S&P, whichever one comes first. Okay, the markets are just lighting up now. We actually had some major news in the form of non-farm payroll, NFP, and no surprises there, devastating job losses, which obviously led to me not really being confident in the dollar strength just as yet, but that's a topic for another day. Now, if you're looking at the monthly time frame, I mean, this is on upward trend upward movement on a general scale, even with the recent pandemic, the coronavirus pandemic affecting the markets, right? You do see a bit of a rebound from the highs, from I think it was close to the highs of February now, right? So it's right near where the year started, right? Close to the highs of February. So you can see generally the market will be heading upwards, okay, most of the time. You do get the drops. Right now, the drops are usually very aggressive, okay, because I think stats say about market drop will be like 8 to 10 times more aggressive than a rise, right? The rise is usually very gentle, it takes a, a bit longer for a market, let's say, to reach 1,000 points or 5,000 points, but it can lose 1,000 or 5,000 points within a few minutes. Okay, typically that doesn't happen on the upside, but on the downside, when it comes to indices specifically, that happens a lot. Now, with that in mind, generally we're going to be trading upwards when it comes to certain stock, rather indices, right? So we're looking at the NASDAQ 100 now. So we're generally going to be looking at opportunities to buy, right? Now, the first thing that we need to overlay on the chart itself would be the Bollinger Band. So we can find this in indicator list, okay? I think custom and bands, okay? That's one way to get them, right? Bands, or you can go to insert, I think it's oscillators and then Bollinger Bands. Now you can leave the period at 20, deviation 2.0, and the only thing you can change is perhaps the color. Let's say you're a yellow type of person. Okay, right, I got gold, got yellow, and I got golden rod. Boom, there we go. Okay, now the drop of the Bollinger Band is mainly used to measure volatility, right? So when a market sort of like overextends, the deviation is, let's say we have we're walking, right? So let's say we're just walking. Generally, we're going to walk in a straight line, right? We might deviate from that straight line, okay? Maybe to the left, Okay, let me just change color here. Maybe to the left of that red line, to the right, but generally, I mean, we can sort of like see where the line is, and we sort of like adjust the way we walk. We're not going to be on the line all the time, but as soon as we sort of like step out the line, we jump back in. Okay, so it's more or less the same concept. Right now, basically, that's me just simplifying things because markets do work in a bit more, in a bit of a complex way than that. But we see the price typically will move within the bands. Right now, under normal market conditions, the candlesticks themselves will be within the bands, right? That's the important part. Now, when there is increased volatility, right, there's an aggressive buying going on, or there's aggressive selling at certain levels, then you'll see the Bollinger Band sort of like not keep up with the candlestick, with the candlesticks, right? So you see the candlesticks start to close above the Bollinger Band. Okay, so you see there was a close as well, right? There was a close as well there. Okay, so there's a few closes outside the Bollinger Band, but generally the market will be sort of like encapsulated in this Bollinger Band over here. Okay, now when there's low volatility, not a lot of decisive action, whether the market is going up or down, it's just moving sideways, the Bollinger Band will typically contract, right? So that's not clearly visible on the larger time frame, but on the smaller time frame, we can see that pretty clearly. Right? It's much easier to see there. Okay, let me just get this drawing out the way. Okay, counting two. Okay, boom. Right, so You see that the Bollinger Band, let me just get some different guys. Let me use white. Okay, that's much better. So you can see there was a bit of a contraction here as the market was moving sideways, and the market will typically expand as there's increased volume or volatility in the market. Okay, see here as well, typically just before the market expands, there is a contraction. Now that's usually during the Asian session, sometimes beginning of the London session, depending on which index you are trading, because you have to remember, if you're trading the NASDAQ, right, typically the NASDAQ will move a lot during the US session, right, because it's a US index, and the German DAX will usually move during the European session, okay, because obviously it's a European index, and let's say Australian and South African will move during that region or country's trading time, okay. So when outside of trading, right, because there's a pre-market and there's sort of like after hours when it comes to indices. Okay, so during that market, so let's say on the NASDAQ from around 3:30 p.m. to around 10 p.m., right, we see increased volatility, increased buying, selling. The market breaks out on the upside, breaks down on the downside, and we see a lot of increased volatility there. And the Bollinger Bands will typically expand around that time. Okay, they'll expand a bit bigger, and then when the market comes to rest again, it will then contract again. Okay, and then once the market starts moving, we sort of like get a heads up. Okay, there's the market. It should pull back in, right, as we see over here. And looking back, I mean, it's pretty easy to spot trading opportunities, right, like this, but we can't really trade that way just by itself, right? So we can't look at markets and try to simplify them to that sort of level, because there will be a lot of false signals that you'll be able to see. Okay, so you need some filters, right? So that's when we introduce filters like counting candles, right? A filter would also be something like the only buying, right? That's a filter, because now if you were to get 100 signals, right, you've already cut down your signals from 100 to 50 potential signals by only taking buys, right? And then we add, let's say, TDI, or we'd add an RSI, overbought, oversold. That would also further reduce the amount of trades that we actually take, let's say from 50 to, I don't know, 35. Okay, but then the probability of the trade working out would then start to increase if we are using tools properly to, let's say, find confluence. Right? I don't really like the word confluence, but I mean, for this example or way that we're looking at the markets right now, we can use it. So at this level, we just want to focus then just on the Bollinger Band as well as the candlestick patterns, because the candlesticks, how they behave within the band, can tell us a lot about where the market could go in the short term, right? And also in the long term, because you can use to trade the Bollinger Band long term as well, position, swing trading, okay, as long as it aligns with the long-term trend. Okay, so let's say now typically we'd like to buy the NASDAQ, which is obviously where I prefer to be most of the time. Okay, I was expecting a bit of a correction to about, let's say, this level here on the NASDAQ 100. Okay, it did happen, did transpire, but I mean, I'm not that convinced just as yet. So I'm actually still sitting out on the NASDAQ buy, because I've been long for a few days now. And yeah, I think I spoke about this in the Telegram, in the Signal channel. But the important point here is that looking at where the market is right now, okay, you can see that it's close to the outer band, because sometimes the band work as support and resistance. So if you want to look at it in that sense, just think of this outer band on the upside as resistance and think of this one here as support, right? So that might be a way of looking at the Bollinger Band that might resonate with you a bit better. Okay, looking at it as support and resistance, as opposed to lines where it closes outside and you're like, yeah, I'm going to go short there. So you use them as support and resistance, because even so with support and resistance, you don't just buy at support and sell at resistance, right? There's certain key things that give us an idea, right, of what the market could potentially do. So I usually describe signals as an indication of what the market could do, right? So let's say someone is driving in front of you, okay, and they indicate to you that they're turning right, okay. So the indicator flickers on, okay, and does that guarantee 100% without any doubt that they will be turning right? Obviously not, okay. But that means that there's a very high probability that that person will turn right. Because I'm pretty certain if you've driven for any length of time, that you probably have done it yourself, indicate right, and you're like, oh no, not my turn, and then you head straight, or you even turn the opposite direction. So looking at trading signals like a bounce off a support level or a bounce off a resistance level is not necessarily the market saying, this is where I'm going, okay? It's the market saying, right, this is where I could be going, right? There's a very high probability that I will be turning here, okay? Now there's a number of key things that you can look at to increase the probability of the trade going your direction, or the trade working out, basically, okay? Because I mean, there's a lot of misconception about what a bad trade actually is, because I don't define a bad trade as one where you lose money, right? You can lose money on a good trade, and you can make money on a bad trade, right? I can close my eyes right now and buy the NASDAQ and wake up on Monday morning with $5,000 in my account, okay? That is not a good strategy long term, obviously, but it did make some money, right? And on the opposite side, I could sit down and do proper analysis, right? Jot down all the key things and just make a very detailed analysis case about why the NASDAQ from where it is right now should be dropping, right? So I include some fundamental analysis, right? I take into account volume. I look at the CFT reports and all of that stuff. And I just do some very detailed analysis about what the market should be doing, okay? And what would happen? And then the market just continues to rise, okay? That is not a bad trade. That is a trade that didn't work out. Over time, doing that sort of thing, okay, over time, doing that sort of thing will ensure that you make money, okay? In the short term, you might have lost the trade, but if you do that consistently, you're far better off than the guy who just closes their eyes and just says, all right, yeah, I'm going to buy here. And then he makes money and then he thinks it's a big shot, okay? All right, hope everyone is following. Okay, so to just coming close to wrapping up regarding the Bollinger Band, look at it as support and resistance, okay? This midline over here, you can sort of like call it the baseline, because generally this midline is going to be where the market or the price travels most of the time. Okay, sort of like on the fence. Most of the time, you're going to be somewhere. The price is going to be somewhere close here, and then every now and then, it might jump up to our resistance, and then jump back down to our support, and then go back inside them. Okay, so once we take that into account, then we sort of like realize, okay, outer band on the upside is a resistance. So typically we want to be short at that level, but now we don't just use that as a signal to sell, right? So we can add what? We can specifically look for different types of candles, right? So we're looking for an aggressive candle, let's say, that pops outside the Bollinger Band. So we're not looking for every single candle now. We're looking for candles that close like this, for example. Okay. So we're looking for very big bullish candles, which show us that, okay, there is sort of like artificial buying. There's a lot of times when the market rises aggressively, okay, it will then proceed to drop very gradually, okay? Or on the opposite side, it might drop very aggressively and then rise gradually. So the rise will be slow and steady, but the drop before that happens will be very aggressive, simply because we need to understand that liquidity needs to be created. Like, in order for someone to buy, or rather to actually buy at this point, there needs to be someone who sells. Okay, which is why we see this sort of behavior consistently in the market, where we see a very aggressive drop, especially during news releases, an aggressive drop. It's a red candle to the downside, and all of a sudden, as soon as the news ends or when the candle closes, it just pulls back all of that and then starts moving in the opposite direction. Okay, that's generally how liquidity is created, because we need to realize that there needs to be two people on either, or two participants involved in any single transaction. So in order for me to be able to sell at this point, there needs to be someone who wants to buy at that point. Okay, which is why we get these aggressive, I like to call them artificial buys or artificial sells, because the market isn't really dropping, okay, but when you're looking at it, it looks like it's dropping. Okay, hopefully I'm going to make sense. Hopefully by the end of the month I'll make sense. But with the Bollinger Band itself, we take this piece of information, okay, and then we're like, all right, now we at least understand why we get this type of movement at the lower bands or at the upper band, right? And now we understand, okay, this is why immediately when we get a very strong break on the upper side of the band, it's preceded by a pull to or push to the downside. Okay, sometimes the push is small, 10 ticks, 20 ticks. Sometimes it might be a big drop, or you might be looking at 150, 200, 300 points. But all we know is that there's generally a pullback that occurs if the market breaks, I can say, the support or the resistance of our Bollinger Band, and does so with the candle that we prefer to see. Okay. Right, guys, are we all on the same page regarding this? Okay. Nothing yet. Right, don't see any questions. So I am pretty certain that everyone knows how to install this. I'll drop this again. All right, let's do that again. Now, if you're using PC, right, it's very basic. Click on this button here, I don't know, I guess I'm just used to using that. Or you can go to insert, right, and go to indicators. I think on oscillators you can find bands. Okay, and on custom, I think it's on trend. Yeah, Bollinger Bands is on trend, and you can just go through to custom. It's basically the same thing. And then you just change the color from there, and then it should be clearly visible. Yeah, that's a default Bollinger Band, right? So I didn't change anything. Okay. Yes, I am trading through MetaTrader 4, MT4. And I think what I'm going to do is I'll just probably drop a, I don't know, screenshots of how you can add this on if you're using a mobile device as opposed to a laptop or PC, because it is a bit different on how you can find that. But I think there is an F button there as well, and under trend there should be Bollinger Band, and yeah, it works more or less the same way. It works. I just checked it now, so it works more or less the same way. And if you can't find it, yeah, you can just let me know via WhatsApp. I know the response rate is really slow, but we'll get it up again once I have some extra hands back. Okay, what would you say is the suitable period for identifying signals, or is it about finding the period that works best for you? I mean, the two things that will probably determine which period you use is one, the schedule, and two, what type of trader you are. Right, so if you are a swing trader, okay, you'll probably be using your 4 hour candles, you'll be using your daily time frame, and if you're a position trader, you'll be most of the time on your monthly, your weekly, and your entries will be on the daily. But if you're a short-term trader, okay, you'll be on the 4 hour, 1 hour, 15 minutes, or 30 minutes. Okay, so you can use, I mean, the Bollinger Band, we'll go over like the exact type of entries that you can look at and what time frames you can use, but generally you can use it on the 1 hour time frame, and you can also use it on the 4 hour time frame. But do be, be aware that, let's say, if you're using 1 hour, you're gonna have a lot more signals than you would if you were using a 4 hour. Okay. Now the 4 hour candles will, or the 4 hour signals will probably have a higher win ratio than the ones on the 1 hour and the ones on the 30 minutes. Okay, but if you are short-term trading, you'll probably be using 1 hour and below. Right? Okay, every trade MT4 is different. Cannot find the mini NASDAQ. Okay, so using the MT4 and not the app. So if you're using the MT4, I'll be able to help you there. No worries. Because sometimes if you using your MT4 and you can't, it doesn't show all your symbols over here. So say your market watch you have over here, and let's say you click on hide all, it's probably going to show what most people are trading and what you also have open up over here. Okay, so I think by default you're not going to have every single thing open up, but if you right click and go to show all, it should show all the symbols that are there, even averages, ask price. And typically if you're looking at the mini, right, the Wall Street 30 mini index, there we have it here, and I'm not quite sure where the rest is, but yeah, somewhere around here. Okay. Right, but if you're struggling with that, yeah, just let me know if you're struggling with that. Okay, so if I'm a swing trader but my account is small, should I go down lower time frames for better risk for my stop loss and target higher? Right, so you just check the question again. Should I go down to lower time frames for better risk for my stop? What I usually say is that when you position for swing trading, right, if your account is really small, it's very difficult to actually swing trade. Because here's the thing, when you're swing trading, let's say you want to go for 200 or 300 pips on your trade, and your risk is, let's say, 50 pips. Let's say you want to risk 50 pips on your trade. You'll be trading 0.01, right? And 50 pips is like $5. Okay. So right off the bat, you're risking $5. And if you have a $100 account, that is 5% of your account. That's okay, right? But if you add half of that, let's say 50 US dollars, then you're already, let's say, 10% of your account. So if you lose that trade, 10% of your account is gone. So it's very difficult, I'll be honest, swing trading on a smaller account. What you can do rather is you can open up a mini account, right? So you can open up a mini account and just use that mini account to take a bit more trades, right? So if you want to be swing trading, just rather open up a, they call it mini or micro. Yeah, I think it's micro. Yeah, I think it's micro account, sorry. And you can trade using the micro account. Because if you're using the smaller time frames, it's more like you are scalping basically, right? Unless you're using pending orders and you convert trades that would have been, let's say, 20 or 30 pips to positions where instead of taking only 20 pips on the trade, your take profit goes to, let's say, 100 pips, right? But you're only risking 20 pips. But the only difficult part about that is that you're probably going to be losing a lot more trades than you'll be winning, right? So that's the thing. You run the risk of having your stop losses too tight if your account is too small and you're trying to swing trade or position trade. And a lot of the time, the market will just stop you out and go in your direction in any case. So rather than doing that, you can just open up a micro account instead, or you can start by, I don't know, scalping here and there, picking up your account, $5 there, $10 there, $20 there, and make that account a bit bigger. Okay. What's the period? The Bollinger Band indicator. I mean, it will show up on every time frame. It's the period, I think the default one is 20. So if you're on a 1 hour, so it takes the past 1 hour candles, the past 20 1 hour candles. So the period is 20 and deviation I think is 2. You just use the default settings, right? You don't have to change any